Good afternoon instead of morning. It is another edition of Insurance Questions Podcast. It is April 10th, 2024. I'm Eddie Buffalo, and to my left or my right, depending on how you're looking at it, is Donnie Lowe, and below us is the wonderful Sassy Sarah. How's everybody doing today? Why are you doing a clean wave? What was up with that?
She's royalty.
I always do that.
I've never noticed that.
Yeah, no, I always do that. And I started as a joke, and then someone happened to take my picture when I was doing it. And my hand didn't look weird because it didn't catch the movement. So it caught it like this. I'm like, that's why they do it. I'm going to keep doing it.
Well, I'm really surprised we're still here because we survived the eclipse.
Yes.
All the people saying it was the end of the world and all this other stuff, we're still here. So,
although sometimes I wish it was the end of the world because, this world's getting a bit.
Speak for yourself, Sassy Sarah. I plan on being here a long time and aggravate as many people as I can.
Yes. Of course.
Yes. I'm going to start the show off by this morning. I called both Sassy Sarah and Donnie Lowe, and neither one of them picked up like they never do. So I texted them both because the Dow started off at 500 points to the bad. So it opened up two different dialogues between me and Donnie and to me and Sarah, and I didn't think it was going to go that way either. And it was really good information, and I think that I would really like to share it with everybody. So I'm going to put up a little graphic there, Donnie Lowe, and you can take it from there, my friend.
Thank you. Thank you. So there's three buckets of money basically that we have when we're working and we are in our accumulation stage for looking towards retirement. And how do we need to use that money? So now, soon, or later. So there are a lot of different strategies. And as far as the tax strategies, I'll leave that for Sarah to talk about. But some of the tax strategies is pay now your tax. Some of it's to defer the tax for later. And one of the strategies is pay no tax later. So there are a lot of different options for that. And I don't know if that's the direction you want me to go into, Ed, or slightly different.
Another thing that I want to talk about is not putting all your eggs in one basket, that old saying, which is true. And there's so many. Let me back up a second, because we did have a talk about greed, and we just mentioned something on Financial Network that we were looking at, that a big part of the problem of 2024 is greed for people and greed for their advisors, good and bad, because everybody sees all these ridiculous returns on variable products. And I got to be honest with you, Don, and you've worked with me long enough that I'm a very safe investor for my people, and that I believe in fixed annuities and whole life insurance, because most whole life products that we deal with are around 6%, the dividends that they're paying out. And that's not guaranteed either. But I mean, some of these companies, they're well over 150 years where they didn't even miss a dividend payment to their customers. And just, and once again, I still talk to a ton of people that are making a poop load of money short selling Bitcoin, but I'm never hearing when they're losing money. So, like I said, you can expound on it, why it's so important to get into a fixed product instead of putting all your money into variable. And all you got to say is that evil word, 2008, where a lot of people that were just about to retire, they had to keep on working because pretty much all their life savings was wiped out, and finances are so cyclical. As long as I've been in the business, it's coming, it's going to be bad. It's going to be bad. It's going to be bad. And it keeps on going and going and going and going and going. So I just want to.
That's a great point.
Throw that out to you, Donnie, and see what you thought about that.
Yeah, no, exactly. And 2008 is a great example because it's not that far behind us, right? When it happened. So we're, looking at 16 years basically. And what if you were the person that retired in early 2008 and you were going to rely on what you put into your 401k or your IRA, and all of a sudden that 401k balance or IRA balance is half of what it was when you retired? So what do? You know, if you're in that environment and that's really the only nest egg that you have, the only bucket of money that you have, you're basically taking money out of something that's decreasing in value. So that's going to definitely affect the future, you know, balance of your account. Where when we talk about some somewhat conservative but safe, and I'm using the word investment very loosely, but when you look at cash value of whole life insurance as an example, you know, it's smart people working with their money will have that insurance, no pun intended, backup, so that if there is a very bad down year in the market, instead of withdrawing funds from their 401k or IRA, they're taking the cash value from their life insurance policy. So they can wait for their investment, their 401k or IRA, to start to build back up again. But one of the great things, and Sarah can expand upon that, is when you withdraw, you know, take a loan out on your cash value of your life insurance policy, there is no income tax that you have to pay for that.
And that's a great point, Donnie. And there's a lot of people that have had whole life insurance for a lot of their adult life. And instead of taking a loan out when they need it, or, you know, they end up sticking to their guns, holding on to it, and using that cash value as additional income when they do retire. You know, and
Exactly.
you spoke of a really horrible thing, you know, and I actually know of a guy that 2 months before the crash in 2008, he retired, and he ended up having to go back to work. So, and that's a shame, because you worked all your life and then you think you were set, and then something like that happens. So once again, don't put everything in one bucket.
Yeah, that's true. And a lot of times what you'll find, if somebody has to go back to work, it's not at the same position or salary or income that they had. And so they're doing something maybe part-time at wherever, Home Depot or a grocery store or whatever.
In fact,
you know?
that's exactly where he went, is Home Depot. You know?
Yeah, exactly.
So Sarah, let's talk a little bit about what you were explaining to me this morning. And I was really shocked at this. She said there's a lot of older folks out there that are actually paying tax on their Social Security. Why? How? How did that happen, Sarah?
Yes. So, and I feel bad because they are, but basically, so the rules are that if you are a single filer, if it's, let me go back up. Hold on, because I have it pulled up, because I'm not going to try to remember these numbers. If you make between 25 and 34,000 of income, so that includes pulling money out of your retirement.
Every week I gotta show people that hair. Look at that hair.
Yes, Aiden took that picture. It's a really good picture. But 50% of your Social Security is taxed. And if you go over 34,000, 85% is taxed. And then of course, if it's married, it goes up a little bit. But it basically comes down to, a lot of people were told, when you start working, put into your 401k, get the match, do this, do that, pay the taxes later, get the tax write-offs now. Something a lot of people did not think about. And again, this is just general tax information. It's for educational purposes. Talk to your specific tax advisor, wealth advisor, who can give you details or schedule.
All the opinions expressed on this podcast are solely Betty Buffalo, Donnie Lowe, and Sassy Sarah.
There we go.
So it's basically, you're putting the taxes off, but if you remember, when you have kids, you have that deduction. When you have a house, you have that interest deduction. Like, there's so many other things that are helping you not pay taxes. If you were to put it into something after taxes where it's tax-free when you retire,
Yeah.
it makes a lot more sense. Or even diversify. I'm all for it. If your employer's going to match 3%, put in that 3% and get that free money.
I was gonna mention that, absolutely.
And I
Yeah,
was
so
even
it's, I'm
surprised
not
you brought
against,
up, I'm sorry, but I just want to say, because I want to make sure that we do talk about it. I was really surprised that you brought up RMDs. Tell me.
Explain what
so-
RMD is.
yeah, so a lot of people are getting those, but they're not pulling out the taxes. So the other situation is, if you pull from retirement or you get RMDs or you get anything, always have your federal tax withheld. Worst case scenario, you get a refund at the end of the year.
I just want to
Um,
stop you there a second, Sarah. Donnie, why don't you explain to us what RMDs are and why it's
So-
important?
An RMD it's the abbreviation for required minimum distribution from your retirement account, whether it's a 401k or an IRA. So when you reach the age of, I believe it's 72 now.
It's not
Um,
71 and a half.
No, I think it's
I
72.
could be wrong.
Yeah, I'll have to double check that.
Got to be close
But,
to that time frame.
right. The federal government requires you to take a certain percentage out of your retirement account. And what's the reason why? Well, they want their tax money. They don't
Yeah,
want you to hold it
100%.
onto it forever.
Mhm.
So
And-
that's something to consider for your income taxes. But however, there are tools and ways where you can defer some of the RMDs or required minimum distribution amounts until your 80s. So
Yeah,
that's a topic for another day.
I always tell this story. I had a woman back in Buffalo that she didn't take RMDs for 8 years. And you were telling me this morning, Sarah, that people are deciding not to do their RMDs.
No,
Or did I get that wrong?
they did not do something correctly, or the company did not send it to them.
Hmm.
Not that they didn't want to do them.
See, I always thought it was the customer's responsibility to do the RMDs, not the company.
So some of them will send it automatically if you're at that age. And then there's some that won't, like you have additional paperwork to fill out. So it's really up to the customer to go and verify what information they need, which is one of the things. The IRS, you can sit there and say, oh, I didn't know, but their whole argument is it's your responsibility to know.
Right.
It doesn't matter if you were told, it's your responsibility. Kind of, you're an adult, it's a part of adulting. It's anyways.
Adulting
Well, that's
is
why you
hard.
should, That's why you
Adulting
should-
is hard.
work with a trusted advisor who will sit down with you on an annual basis at the least and pretty much prepare you. You know what? Another year or 2 years, you are going to have to start taking some money out of this, or we're going to have to look at other options.
Yes, I always recommend, even for people looking for taxes, go to someone who doesn't just do the paperwork that you give them. They go, hey, next year, I've noticed you're doing this, but next year, what about this, this, and this? It's something to consider. You always want someone who's proactive. They're typically higher in price, but it's better than, oh, I didn't know I could take that deduction. I actually met with someone, and we were going through the list of just normal deductions as a business you should be writing off. He didn't know he could write those off.
That
So he's
was
paying
really
taxes on
surprising.
income that he really doesn't
Yeah.
need to pay.
And this goes back to, why we do what we do. I mean, we've had, talks about the way we do business, and Sarah goes out of her way to help her customers. And I know I do. And I know that from working with Donnie all these years that we take our fiduciary responsibility very, very, very seriously. And when I said that, people are greedy, yes, but advisors are greedy too. I'm not going to do anything just to get a higher commission. I'm going to make sure it works for my customers, because I plan on being in this business a lot longer than I've already been in it. And I'm in it for a reason, because I'm not just going to make a quick buck and say goodbye to you. A lot of my clients end up becoming friends, and they, you can tell why you do things, and you can tell if somebody wants it just for the buck and then they're gone. And you've seen that, Sarah, especially the businesses that you bought, it's same thing, even though we do two different things, but we're both dealing with people's finances,
Mhm.
and that could go sideways really quick.
It can.
And hopefully, from everything that I know about you and Donnie, we give out information that is very useful to our clients. It's up to them if they want to use that information. If they don't, that's up to them too, you know? So, what else you got for us today, Donnie Lowe?
I think we covered just about what we wanted to cover today.
Mm-hmm.
I think regarding the market, yeah, it was a very down day. I checked maybe about 10 minutes before we started here, and
Unless you want slaughtered pigs, that's up today.
markets were down anywhere from 1.2 to
Yeah.
2.9%, depending on the market. So it was really based on the release of the inflation numbers for
Mhm.
March, which were higher than expected.
Just
So-
goes to show you, Donnie, everything's better with bacon.
There you go.
Yeah.
Sarah, I know we're getting close to the end here, but I want to go in a little bit more of what you explained to me this morning about the gentleman that didn't know he could write off the kids.
Oh, so you can, if you own a business, you can hire your children where you don't have to pay Social Security and Medicare. The thing is you have to put the money in an account that has their name on it. You can't just say, oh yeah, I'm paying my 6-year-old son to hand out flyers and then
I
put
didn't
it
even know
back
you
into
could
your
do
account.
something like that.
Huh?
What is the limit on the ages? Could what, hey, Emmy and Jack are gonna go work for grandpa.
So
You
it,
know what
it
I
has to
mean?
be age appropriate. So for example, like a 6-year-old can hand out flyers or put door knockers on or
Okay, that
something
makes
along
sense.
those lines. You can't hire a 2 or 3-year-old because what can you really give them other than just looking cute for commercials?
Entertainment, the entertainment value of that, I've been calling Jackie Bruiser because every time you see that boy, he's got a new bruise.
Of
And
course.
there's a dollar limit too, Sarah, right? I think it's 14,800, is it?
Yeah, you can't make your child a millionaire off the company. Well, and I've hired my kids, like I know I don't technically have to do Social Security, Medicare. I still always paid them that because my thing is I want them to retire and have benefits. So the sooner I can pay into it, that just helps them.
I
As
just
long
think-
as, hopefully if it's still around when they're around, that's a whole new topic.
I just think it's odd because it's you saying it's 14,000 if you want to hire your kids, but you can now here's a question. Okay, you hire your kids and you can pay them $14,000 in salary, right? Can you still gift them the $17,000 you are allowed to every year?
Yes. And it's actually, you can give them more. So let's say, no, because you gift them 17,000, you don't have to report it to the IRS.
Oh,
If you gift them over 17,000, for example, let's say you have a child who has some difficulties getting a job, keeping a job kind of thing. So you're paying their rent, all their bills, you're paying medical doctors, you're paying, what's some other thing? So you're just basically helping them survive, but they're living outside of your house. You can keep track of all that. And let's say it works out to be $50,000. You just let the IRS know, hey, this $50,000 I gave to my child for this, this, and this on these days, these amounts, apply it to the 2 million gift tax. And then let's say you pass away and they get $5 million. The IRS is going to deduct everything you reported to them over that 17,000.
yeah, and you're talking about a death benefit. Death benefits
No.
aren't taxed.
Well,
No, but that's the thing is you just have to report to the IRS like you want it deducted from that amount. So if they get the 5 million, let's say you paid 500,000 over the time frame, they get the difference of the 2 million. They've already received 500,000, and then whatever the difference is, they have to pay taxes on it.
is 2 million the lifetime exemption?
I think
thought it
went
was
up to
higher.
14. It's a lot higher. They keep changing it. It
Yeah.
was a 2 million a few years ago. I think it's gone up to 14. I don't really keep track of that because I don't have clients that have that much wealth
Right.
that have
And
passed away that I got to deal with.
So
Yeah, I think you're right. I
basically
think it's
what you're
14.
saying is if you want to, exploit your children with child labor, talk to Sarah. She'll tell you how to do it.
I will tell you how to do it the legal way. You got to pay them.
So, well, I think this was a really good, I say that about all the shows we do, but I think it's very informative and very timely right now because everybody works really hard for their money. And I think it's our job to make more money with your money, but in a safe way where you're not putting a lot of that in jeopardy, that in case something horrible happens with the stock market, it's not directly tied to that. So the great show today, guys. So we're gonna wrap it up. Tomorrow, I don't know if Mike Casey show, if we're gonna be talking about Bitcoin or annuities, because I think once a month we are gonna go in pretty deep into Bitcoin. So if you have questions about Bitcoin or annuities, hand them over to us, and you can actually like and comment on this video.
And subscribe.
I stole your thunders. Come on, say it, Sarah. You got to do it.
Like, subscribe, follow, all the things on the socials.
Y'all got to do all those things on the social, like Sassy Sarah tells you to. Let me tell you what. So, well, once again, and I think we don't even have to say it after the things we did talk about today, but if you want to work with people that are just like you, we're the ones to come to. So for Donnie Lowe and Sassy Sarah, I'm your buddy Eddie Buffalo. Thank you for tuning in, and tune in tomorrow to the Mike Casey show. So I can talk. Let me tell you what.
I need to teach you how to do the wave.
I don't know about that, girl. Let me tell you. Well, first of all, I got to stop sharing so I can turn everything off. There we go.
Well,
I'm new to this thing. I never.
Did you
done
stop
this
recording?
before. No, not yet. We keep going.
Oh.
still
Oh,
working
okay.
on it.
All right. Take care, everybody. Bye.